What's up, everyone? This is CryptoSurf here. Today's Wednesday, July 15th. We have Bitcoin over USD. And I just want to share my thoughts. Originally, I did think this was going down, but after more analyzing, after further analysis, I do think that we are going up now. And it looks pretty clear to me that we are going up for multiple reasons, and I'll explain that right now. So, um, first off, when I was viewing it as a corrective move or a bearish move, I was looking at the lower time frames, which is the 1 hour time frame, the 4 hour time frames. I was looking at it like this, and I did not really zoom out too much, but this, as you can see, was like an A, B, C move. So I was figuring after this 5 waves down, A, B, C up, we'd get another 5 waves down. But if you zoom out, and even on the 4 hour, but more on the larger time frames, you can see that this is more of a sideways consolidation. I'm viewing this now as a asymmetrical triangle. So although over here we've seen that it did have an extremity or a move that's kind of gone out of the norm right here by making a higher high after wave 3 was placed. I think this is considered just a running triangle, and this is A, B, C, D, E, and each one does consist of a 5 wave move. So for example, this was, a 3 wave move of A, B, smaller ABC. So this was A, here's B, no, I'm sorry, whoa, ABC, ABC, whoa, 1 second. There we go. A, B, and then 1, 2, 3, 4, 5, C. So that was for that. Then A, B, C was for D. And now right here, this corrective move was B. And I believe we're working on C right here that creates the larger degree E. And E is the last part of the triangle. So A, B, C, D, E. This triangle will be done somewhere around here, just without making a lower low of here. So 88.50 basically. And so I think the triangle is going to be done somewhere around 8,900, 9,000. And with that being said, we can try to predict where the bottom would be, but we can also play safe and just target the break of D. Once we break up, so let's say we go down here and then we come up a little bit, we break out there, you can place an order right here or wait for a small pullback and place an order right here, stuff like that, or ladder in your orders before we continue up. So that's the goal for me. I'm going to start laddering down and upwards as we have these small pullbacks and stuff like that. The clear indication for me is when the pattern is confirmed, which is the break of the D, or creating a higher high. As you see, this is a series of lower highs, lower highs, lower highs. As soon as we get one higher high, that'd be a great indication. Now, on top of that, if we scroll out, like I said, to the daily chart, you can see it a lot clearer. Let me go ahead and remove this. It's not necessary. You can see it a lot clearer that this is a triangle. I mean, you can also take this and ignore the wick if you wanted to. It still looks like a triangle, a symmetrical triangle, which is a bullish pattern if it's coming from a uptrend. So it's just merely a continuation pattern, but if the previous trend was up, the symmetrical triangle is going to continue the previous trend, and if it came from a downtrend and formed this, it would continue down. In this case, we went up and then formed it, so it's going to continue the prior trend. And to break down the Elliott waves, we have this leading diagonal for one, blue wave 1. We have a WXY for blue wave 2. We have 1, 2, 3, 4, 5 for blue wave 3, and now we have this for blue wave 4. We have a very fitting symmetrical triangle, which is very common for fourth wave. As you can see, during this fourth wave, this is exactly what you want to see, a series of lower lows or just declining volume in general. On top of that, if you add that daily 100 moving average, you can see that we are seeing some support, or at least the moving average is helping it or holding it up. From that perspective, I don't really use moving averages too much, but it is good to know, especially on the larger time frames. I like to use it. But yeah, guys, other than that, that's about it. We have 1, 2, 3, and I believe this is the fourth wave, and so this is the fifth wave we're about to play out. That's about to play out. So I am looking to take that long, given the certain circumstances are hit, such as this creates a small incremental lower dip right here to around 9,000. And I'll start looking to place some entries. I'm going to keep the stop loss at the low of C for now as I start placing small entries, and as it starts going up, once we break above this yellow line, I'm definitely going to bring stop loss to wherever E ends, which would possibly be 9,000. If we dip here, come down a little more, I'm going to start buying more on the assumption that that's a retest of this triangle. So right here, I'm going to buy. If we start going up and break out right here, I'm going to buy. And then if we come down a little more right here, I'm going to buy. And then I'll be all set for 3, 4, and 5. And the 3, 4, and 5 will complete the larger degree fifth wave. And with that being said, the fifth wave, the target for the fifth wave, I have two targets. One is a simple technique that I like to use, where you take the measurement from the beginning to the end of wave 1, and that's oftentimes the same measurement that's going to happen for wave 5, and that's usually the case when wave 3 is extended very far, but in this case these were like a 1-to-1 ratio, so this may not work out, but that's why I have that target there. That's a possible target still. And then the other one is a very simple pull from the Fibonacci extension tool from the bottom of 2 to the top of 3 to the end of 4, wherever that may be. And that's why I have this tool right here, the 0.618, not the 1.618, but the 0.618, which leads us to around 11,300, 11,400 area. So that's the goal. You can start laddering out right here. So that would mean to close a little bit here and see if we come down a little bit and start breaking out, you can close a little more here. And if we continue up, you just start closing a little more, but we know that this would be the fifth wave. And whenever it does turn over here, or here, regardless where it starts turning over, you want to be fully out somewhere around this area. And yeah, that's about it. We can look to short if we're presented with the right opportunity, but regardless, the long is the play for now, and that's the target. I would say that we're probably going to be able to reach maybe 30%, so 30% with a possible 3 to 4% stop losses. An amazing trade. As you can see, that triangle is very fitting for the fourth wave, like I mentioned. And so this is the trade, guys. Like I said, I'm no longer bearish. My bias is bullish until proven otherwise. All right, peace out.